Let's get started. I'm Dan Runde. I'm a Senior Vice President here at CSIS, and I hold the Schreier Chair. We're having a conversation today about what the report that we're calling Time for a Third Wave of Enterprise Funds. I suspect many of the folks in this audience know what enterprise funds are, but just so that we're all on the same page, these are enterprise funds are an innovative U.S. foreign policy tool created in the early 1990s that use U.S. government funding to stimulate economic development by investing in the private sectors of developing countries. Unlike grants or loans directed to foreign governments, enterprise funds use U.S. government funding to invest in private equity and credit in emerging markets. They're strong complements of other U.S. development efforts. And there have been a couple of waves of enterprise funds. The major wave, sort of the golden age of enterprise funds was, say, from 1990 to 1993. There were about a dozen of them launched. And then there was a second wave in 2011, 2012, as a response to the Arab Spring. I think the enterprise funds, in my view, were ahead of their time in many ways, but what the challenge has been since then has been to update, if you will, the enterprise funds so that the world has changed from 1991. I often say it's not your grandparents' developing world, it's richer, freer, more capable with more options. And I think it's fair to say it's not your grandparents' private equity world either as well. So I think there's been a lot of changes, and I think there's an opportunity, especially with the passage of the BUILD Act, and I think we want to get into that, but also the emergence of impact investing, the emergence of emerging markets private equity as a sector in the last 25 years, the professionalization of investors who've gone to business schools in the United States and have gone back to where they grew up in parts of the emerging markets, just the emergence and the explosion of DFIs, development finance institutions. All of that is part, and sort of a major wave of globalization after the fall of the Berlin Wall. All of that suggests that there is an enormous opportunity. The one other thing I would suggest, and I hope we'll get into this, is there's been an enormous explosion in private capital in developing countries that we could tap into if we did Enterprise Funds 2.0. So with that, I'm going to stop, and we're going to have a panel discussion about the report and about the opportunity in front of the United States. Thank you. Okay, we've got some very smart and interesting people who've agreed to be panelists. I'm very grateful. First, we have Jim Harmon, I think one of the most accomplished leaders in American finance. He is the board chair of the Egyptian American Enterprise Fund, and is somebody who was in the Clinton administration, who ran US Exim Bank. Being a board chair of an American enterprise fund, you're not in it for the bucks. You don't get paid for being the board chair of the Egyptian American Enterprise Fund. It's a form of public service. So, Jim, thanks for being here. So what do you think? Do we need a third wave of enterprise funds?
So first, the reason I come to Washington from New York and from Connecticut is to hear nice introductions like this. It's great. Everybody's very diplomatic in Washington, at least in the opening comments. They may feel differently quietly, but it's very nice introductions. I'm hoping you're taping it because I have to play it for my grandchildren. They don't hear these nice things said. So I hardly think that I'm one of the greatest leaders in the financial world. I might be one of the more active people in the enterprise fund world right now. So I guess I think we certainly should do a new wave. The world has changed in the last 25 years very significantly in three principal areas, which the public sector is a little bit behind. One is in terms of human capital. There's an enormous number of talented people now in the developing and frontier world, which we experienced in Egypt, who could run a fund very successfully. We didn't have that 25 years ago. Secondly, there's money, as Dan has already said, all over, coming in now in different ways that we have to tap into, so it reduces taxpayer exposure. And the third, clearly, is the technology in the world. So the investments that we've made in technology have produced the kind of results that we've had, which will surprise a lot of people. Our portfolio is probably worth twice our investments now on a real market basis. So technology and people and capital have changed it. And so it's about time that the public sector focused on what we should do differently on enterprise funds.
Great, thank you. So But Jim, if you were thinking about some of the tweaks that you'd make, because there's sort of a, I don't know, a kind of a disk operating system for enterprise funds. There's sort of an early 1990s sort of a operating system and sort of assumptions about, well, it's got to be this amount of money and it's got to look like this. What would be some of the tweaks you would make, given sort of the world that we're in, that to make enterprise funds sort of an enterprise funds 2.0 or sort of an updated version for the 21st century? What would that look like?
So first thing I would do is I would have a mechanism for picking the chair, which you didn't have in the 1990s. And so because I wasn't given a lot of information when I was asked to take this position, I had to go around and visit with 5 or 6 chairs of the European enterprise funds. And I learned more from them than I learned from the White House and from many of my friends. And being that I considered myself to be a friend of the administration since I was in the Clinton administration, it always surprised me I didn't get a lot of the information that I needed to make the decision. But I would change the mechanism of picking a chair. I'd either have some combination of former chairs or some combination of people in this panel maybe could probably sit together and be very productive in picking the chair. The chair is the most important position in an enterprise fund. He has to be an asset manager. He has to be a diplomat in dealing with the countries. And when I first took the position, the Egyptian government was against what we were doing because they felt that we should just give them the $300 million and let them invest it. In fairness, I don't want to be critical of anybody's here, but our State Department thought that they could invest the money. They didn't need an outside group to do it. So everybody thought they could invest the money, and no one thought much about how to do it differently. And to do it differently, you really have to think about how you pick the chair. And I would form some kind of a joint venture with the private sector to pick chairs for future enterprise funds. And the second thing is what Dan already alluded to. I would start with, I would take in some impact funds as a partner. So it's a private sector, public sector joint venture from day one. And they're willing to do it now. They've approached us about joining in the Egyptian fund, but they would like to be involved in future enterprise funds.
Great, thanks a lot. Okay, Agnes, I think you've been one of the most interesting innovators in development finance. You've had a fabulous career at IFC, you were at the Grassroots Business Fund. You did some very interesting things at AID, doing another form of public service while you were at AID with the private capital group. Some of the work about trying to bring in pension funds, it sort of speaks to sort of these larger truths that we've been talking about. Talk about enterprise funds from where the various hats you've worn, and you're now currently at the Rockefeller Foundation as a fellow, thinking about development finance more broadly. If I put on the table, do we need a third enterprise fund? Do you agree with that premise? And then second, if you agreed with that, what fixes would you make to the current model, given everything that you know and from your 25 years of experience in the biz?
Thank you, Dan, and thank you so much for that great introduction as well. I really appreciate it.
And I'm president of your fan club, by the way. I just want you to know that.
Thank you. That's a lifetime appointment. So I'll be a little bit more personal about the enterprise funds because as part of USAID, I really didn't participate in setting any of them up. But while I was in Poland, I was living in Poland when the enterprise fund was active there. And I can tell you that one of the biggest advantages, one of the biggest benefits really to Poland of the enterprise fund was not only the capital, but also the expertise that it brought. Meaning that it immediately started bringing in connections with investors who knew how to invest in enterprises, especially ones that were really starting out, especially ones that were looking to grow very fast. So I do feel that investment is kind of the last apprenticeship business where you actually have to invest alongside of someone who knows what they're doing in order to be good at it. And that's what the Enterprise Fund brought to Poland. It brought a cadre of people who then trained locals on how to do this well. And those locals went on to become some of the premier private equity professionals of Eastern Europe, not just of Poland. So it created an entire talent pool that was very powerful and allowed the entire region to start moving closer to a very well-functioning capital market. So when I look at a place like Ethiopia, for example, today, where there are a couple of SME funds operating, but everything I hear from those funds is that they have a really difficult time explaining to entrepreneurs, explaining to government officials, explaining to service providers, to businesses, what it's like to invest equity. So an enterprise fund, for example, in Ethiopia, could not only bring capital for the businesses there, it can also bring the links to the expertise that's really needed and the networks that are needed to really make a capital market function. And I believe that's one of the best things that the U.S. can bring to a lot of these countries, as well-functioning capital markets. So that, I think, is a really, really important point. What would I change? I think a couple of things. I know that the enterprise funds, throughout their history, there has been kind of a push and pull between more or less government control. And I do think that there's got to be, I haven't worked for the government, I know that the government would like to have some say in what happens, but I do think giving a little bit more flexibility to the fund managers, picking those managers wisely, and I think, as Jim has already mentioned, allowing private investment to come in alongside of the government funds early on, not just later. So not having these funds as purely government-funded funds, I think could be really powerful and could leverage government money in a better way and achieve the outcomes a lot faster. So that's probably my number one recommendation.
Thank you. So, Agnes, if you, there were a dozen or so in sort of the first wave of enterprise funds. I think there were most of them in the fullness of time would be deemed as successes or really big successes, but there were a couple of duds. And so some of it, I think, in retrospect, many folks would say, well, some of the reason that there were duds is because either some of these issues of having the right board chair or the right board or the right management team. So that, unfortunately, that Washington is a risk-averse culture. I think the aid world has gotten hammered by the political class for failures, and so when there are errors, 90% of the energy is on the failures, not on the successes. So what would you say to somebody if we went up to Capitol Hill and they said, I remember there was this one fund and there was this dud, and what would your response be to that? What do you say to that?
So I think investment is a risky business, and I think you help manage those risks by picking the right investment managers. So I think picking the right investment managers, picking the right governance is probably key. I haven't been involved in the Eastern European funds that have failed, but at the beginning of my career at USAID, I was involved with the unwinding of the African Enterprise Fund, which actually was not really an enterprise fund. It was really a grant program that was, a bunch of money that was given to someone to try to invest all over Africa, which that in itself sounds strange because there are a lot of different countries in Africa, and you can't just kind of say, this is the way to do it. But so I don't even think of that. That is brought up a lot when criticism of enterprise funds comes, but that was not an enterprise fund. So also comparing apples to apples is important, and seeing what were really the enterprise funds, what kind of benefits they brought is probably, and what were the challenges, and addressing those, and just keeping that to the defined set that were really enterprise funds is important.
Okay. Bert, you run SEAF, the Small Enterprise Assistance Fund. You've been with it for 25 years, más o menos. You started as a child prodigy, obviously. But Bert, you've been around the development finance business, and you were working in it before it was cool. You've helped enable dozens of funds around, at least 24 country funds, as far as I can tell, oftentimes in partnership with AID. You've been around enterprise funds, so you've been in the biz a long time. So I wanted you to be on this panel because I know that you're aware of sort of the changing nature of the landscape, the development finance landscape. So I wanted you to talk a little bit about, do you think we need a third wave of enterprise funds first? And then could you talk about, if you were going to make changes to the business model of enterprise funds from the early 90s, what changes would you make?
Well, thanks very much for that introduction as well. We do country funds. We've done 38 funds, 1.2 billion over 30 years, but we tend to be smaller than the enterprise fund. So in many cases, what we've done is invest in small enterprises, grow them, and sell them to the enterprise. Investors have bought a couple of ours, and a number of other enterprise funds have. So I know them from that side. What I would say is, do we need? I think the enterprise funds are a great policy tool. I think if they are part of the message that entrepreneurship, private sector development is worth the risk and is worth the training, as Agnes says, and I think there have been some terrific people trained by enterprise funds, then that's terrific. Where I've seen some of the problems, whether Central Asia, the Czech Republic, or the South Africa Enterprise Fund, is where the management and the directors have been politically appointed and are largely not accountable. Now, any private equity fund, there's bad private equity funds and there's good private equity funds. So I think there's bad enterprise funds and there's good enterprise funds. If we focus on what the enterprise fund's mission is to be, and what I'd like to say is the part of America that is very attractive to a lot of countries, to all the countries that I've been in overseas, and we're in 30 countries, is the entrepreneurship, the innovation. The part that's not attractive is drones killing people at weddings. So, if you were going to focus on what the message is, which is that free enterprise, private sector development is a more sustainable way to affect development, enterprise funds can be a terrific tool. I think they can crowd in money, as Jim was saying, particularly because there is a political awareness and a lesser chance that domestic forces are going to disturb private enterprises moving, because the U.S. will be aware of it at some level. What I would change, I think all private equity funds need to be accountable, and I think in Generation 1, the accountability was largely with political people. I mean, the Central Asia Fund is a very interesting one to watch, as was South Africa Enterprise Fund, that we helped unwind. So I think those are the issues. The other thing is enterprise funds sometimes, by focusing on the large investments, and that is a heck of a lot of need there, and I've been in Tunisia just recently, and there was a lot of interest in the Tunisia American Enterprise Funds, but there's a feeling that they're over-selective. Now, I don't think they should be over-selective. They should be selective. That's the essence of private equity. But if there is a component, maybe soft money, whether it's promotion of entrepreneurship or help preparing companies who might ultimately become eligible for enterprise funds, I think there's a need to reach out for the larger private enterprises. A good fund, I don't know how many Egypt has made, but most enterprise funds will invest maybe 15 to 20, which is a lot by private equity standards. Obviously, there's a lot more private enterprises in the countries that we're talking about than 15 to 20. So, sometimes they've done things like the Baltic American Enterprise Funds, which set up a mortgage bank, or they've set up a mezzanine kind of fund. Those are ways around it. But if you're trying to really reach out, encourage private sector enterprise, I would encourage version 3 to have an enterprise promotion component and possibly even boot camp to the earlier stage companies who are not really ready for the rigors of an enterprise investment fund. Those are some of my thoughts. Happy to go into greater detail.
Okay, so your argument, would you say that this issue of managers and board chairs, picking those people are critical to getting this right? Is that basically what that's what didn't happen in some of the duds?
I think the accountability was there, and then certainly, yes, the initial, I mean, where it's worked best is where people, as Agnes and Jim have said, investing is a risky business, investing is an apprenticeship business. We've all made mistakes. I think the reason you see older people up here is because we've made mistakes, and now we can talk about them. I think there's other ones who have dropped out of the industry. But I think having an understanding of what private sector investment is like should be the primary criteria. In some of the original ones, it was a very political issue. I think, Stephen Solar's Central America, for example, I don't think necessarily he was ready to assume the chair.
No, it was a good idea at the time, I suppose. But, okay, so John, thanks for being here. So John, I owe a lot. I've known John for 20 years, and I think in many ways I went to the Kennedy School because John was at the Kennedy School, and that's a conversation for another time. But in many ways, I've a lot of my career has followed John Simon's career, and he had a fabulous run in Bush 43. He was the number 2 at OPIC. He was at AID in the policy shop. He was ambassador to the African Union. He was at the NSC. And so he's then also had another career as a merchant banker putting together transactions on impact investing. So I thought it was very appropriate that that you'd be on this panel, and I really appreciate you taking the time to be here. So time for a third wave of enterprise funds. You agree with that? And if you do agree with that, what tweaks would you make to the enterprise fund model, given that it's 28 or 29-year-old paradigm?
Thank you, Dan. And Jim's absolutely right. If you want your ego boosted, this is the place to come.
I meant every word I said, Mrs. Simon.
But so I think what there really is time for is a real focus on enterprise as an element of development, which, I mean, one thing I should say at the outset is looking out at this crowd, I mean, we have here a lot of the people who are really part of making the enterprise funds, the successes you mentioned, the successes they were. So we should get to do a discussion very quickly, because very shortly we'll be able to interact with people who really know what they're talking about. And in a second, I'll talk about a little bit about my view about why the conditions that were there then that made this such an effective tool for so many places back then, and how those conditions might have changed, and how we have to think a little bit about changing our approach to enterprise funds. But the most important thing is enterprise funds, as Bert said, are one tool of many that should fit into a comprehensive approach to enterprise and finance as fundamental tools, private finance, as fundamental tools of development. And this, especially in the context of the BUILD Act being passed, it is worth thinking about how we can use this tool as part of that. The first thing I would do if we begin to think about that is think about what were the conditions that called for the existence of an enterprise fund or enterprise funds, in the early 1990s. And I think Agnes put her finger on it. I mean, you were going into situations where private enterprise was new, and there weren't the skill sets, there weren't the tools, there weren't the mechanisms to allow companies that were just forming to get the investment they needed to grow. And enterprise funds filled that gap, and they, even though they may have only made 15 or 20 investments, they blazed a path that allowed a lot of other people to follow and actually do quite well financially and developmentally in terms of more traditional private equity fund models. And so part of what we have to think about is what's the problem we're trying to solve now? Because in many places that problem has been solved. In many places you do have established commercial or impact funds that are going in, and so where is it that we can use the enterprise funds to actually get value add, if you will, and not just replicate what already exists? And I think there are three areas that I'd think about and think hard about using enterprise funds as a tool. And first and foremost, before you begin this analysis, you have to ask your question: what is it about the situation that makes it not ripe for the existing tool set we have, both in the public sector through things like the new DFI or other DFIs, or just purely in the private sector? And obviously one thing that's mentioned in the report that I think is very valuable is doing that trailblazing to attract private capital to places where it isn't already. And I think the population of those places is much, much less than it used to be, but it's still, there are some places out there where international private capital could follow in the steps of an enterprise fund, and where an enterprise fund can make that happen, particularly in places that are recovering from conflict and places going through transitions, as happening in the Middle East. And I think you actually named a few places, Dan, in your report that made a lot of sense from that perspective. I'd like to think Zimbabwe will be that way someday soon, not quite there yet. Certainly Ethiopia under its new president is a very attractive place to think about where enterprise fund could add value, recognizing that there's already a lot of interest on part of investors. And so part of what the enterprise fund has to do is figure out how it harnesses that and doesn't compete with that. But there's another area which wasn't mentioned in the report that I think is very important, where an enterprise fund can do something that our other tools of investment tools have a tough time doing, which is mobilizing domestic investment. So one value of an enterprise fund, as it was originally constructed, is it doesn't have to give returns back to hard currency holders. Now, one design, of course, would bring impact investors in who might be willing to take the currency risk that commercial investors wouldn't. But another design is, how do we bring in the local investor? How do we bring in the pension fund? How do we create an ownership culture inside a lot of these countries, which are so key? And I think there's some models that think about enterprise funds as a precursor of things, and of course this is a big leap, but it's something like the Alaska Permanent Fund, where you have, an institution that invests on behalf of the people, and then the returns get realized by the people. So they all have an interest in a in an investment environment that's pro-business and pro-investment, which unfortunately too many people, I think, in some of the more frontier economies don't see the value in that type of investment environment. And then the last area where I would see enterprise funds being a great way to jumpstart investment is in the basic human needs area of investment. So in many countries, you're not going to achieve your SDG goals with government funds.
I know this audience probably knows, but for the television audience out there, they may not know what SDGs are. What is an SDG?
The Sustainable Development Goals that talk a lot around reducing poverty, reducing inequality, providing basic health care, water, sanitation, the basic human needs. And, you know, in most of the developed world, these are things that are provided by governments. In many of the developing countries, the governments just don't have the capacity to do that. In fact, today, where people get these services, they're often provided in the private sector. And they're not your financial service investments, they're not your telecoms investments, they're not the things that are going to deliver these 10x multiples that'll really be attractive to private investors, but they are things that are fundamental. There are things that because people need them, they can produce value over the long term. And in my mind, there are, you know, the enterprise funds, I can imagine an enterprise fund model that looks to work with implementers on the ground to basically turn what today is largely grant-funded activities into investment-funded activities that are sustainable over the long term, and then eventually maybe migrate into publicly funded, you know, utilities or service providers, but where today that doesn't exist.
Right, so right now, I'd say much of basic education in Africa are provided by fee-for-service slum schools that are, in essence, private enterprises. Now, there's a whole series of sort of taboos and for some people in the basic education world to say, like, we don't want private delivery of basic education. Well, we can choose to, like, have an entire cohort of kids either not get the education or we can enable it. We can choose, right?
That's exactly right. And the healthcare is actually true as well.
Healthcare is another. I mean, there was a study by McKinsey that IFC did in 2007 that said, I don't know what percentage of the 60% of the healthcare delivered in Africa is delivered by for-profit companies in Africa. Now, that's not the mental map we have in Washington. We have some other kind of mental map, but it doesn't look like that. And then some very significant part of healthcare in Africa is paid for out of pocket. So actually, if you want to deliver education, if you want to deliver healthcare in places like Africa, and you're not including the private sector, and if you only think in terms of grants, you're not really thinking, you do sort of think in terms of private sector, but if you're not thinking in terms of investment capital on these sectors, then you're not actually, we're not going to achieve the SDGs, or, you know, and this is the point of billions to trillions, right? This is part of it as well.
That's exactly right, Dad. And in my views, there's some investments in these areas that potentially have tremendous scale potential and tremendous potential to deliver commercial returns to investors, but a lot of them are just going to be steady as she goes type investments that can deliver modest return, but an enterprise fund structured correctly could help fund those things.
So John, so I want to go back to this boo-boo question. So there were some boo-boos, there were some duds. So Washington has a long memory. So people on the Hill will say, well, there was that Central America Fund, or there was that Stephen Solars did this, or so and so. What is your response to the critique that you're going to get if we said we need to have more enterprises? Say, well, we did some of those and some of them didn't work. Now, as I said earlier, I think in the fullness of time, most of them worked or really worked, but the focus is on the one or two duds. What's your response to the duds thing?
Well, there are three responses. The first response I'd have is Agnes's point, that investments inherently are risky business. And, you know, if you want to achieve results, you have to be willing to take some risk. And obviously, when I look at the OPIC portfolio of 50-plus, 60-plus funds now that have been supported, there's certainly a number of duds there. It's less obvious because they're part of a much broader portfolio, and so you look at the whole portfolio, you see primarily success. But I think it's less obvious for the other point that Bert made, which is there's accountability built in to every OPIC fund in terms of the best practices that inhabit the private equity industry, and that all had to be built from scratch in the enterprise fund world. So a lot of the mistakes we're learning, and so one of the answers, part of the way we do this is we have to learn from our mistakes and build it up. And the big mistake is the one I think both Bert and Jim pointed out, is where you had politically governed vehicles, you tended to have bad results. Where you had vehicles that had arm's length governance, that had more management that looked more like the best practices of pure private equity, you had better results. And that is a fundamental part of getting things right. And then, I mean, the third point I'd make is part of the part of the reason we do what we do, and part of the reason to keep doing it, is to understand that this is all an imperfect process, and there will, if we're not making mistakes, we're not actually doing anything, and we have to. And the question isn't not to make mistakes. The question is to learn from them and identify how we've created, mechanisms to mitigate them in the future.
Okay, so I want each of you to tell me if you had a magic wand and you had unlimited money, where would you set up enterprise funds? Agnes mentioned Ethiopia, but let me start with you, John. Tell me one or two countries that come to mind where you would do this. You gave some of the kind of profiles of these kinds of places. Where would you pick? What would you pick?
So I think you are right that Ethiopia today would be an interesting place. Yeah. I think Zimbabwe today is not quite there. I think it could be there in the future. It's a question of what happens.
How about North Korea? No. If we got peace in our time in North Korea and we hung out, we dangled out, we'll do a $1 billion enterprise fund.
Well, first off, I wouldn't put $1 billion into any enterprise fund to begin with. To begin with, I would do much smaller with, again, the idea of utilizing the other tools to follow up. But the second thing is, I think there's a long list of places where you could apply this tool before you would get to North Korea. One place where I think was worth thinking about it for a while, and now the political environment is very difficult, but it's, is Pakistan, for instance.
Yeah, I'm all in on that.
And I think, and so there are a lot of countries that I think are very strategically important to us, where the governments are trying to do the right thing, where they would be helped by building an entrepreneurial investment culture and class, and where if you structure it correctly, I think an enterprise fund can be part of not only a proactive economic strategy, but also a proactive political strategy. And obviously, I think that's part of the reason there was a second wave, as you said, after the Arab Spring, because those were areas where building up the private element was a fundamental part of the political approach to what had to happen.
Okay. Enterprise funds today.
Well, I'd like to be provocative because that will get a conversation going. And certainly, I think where enterprise funds have been great and are necessary is where the political protection implicit in the capital, as well as the transition or the restructuring of the country, has chilled adequate private equity coming in. So the transition countries in Central Europe were a terrific example. We're going to see some transition in places like Venezuela as well, which would be very, I think, useful to prepare a tool for that.
When the bad guys leave.
Absolutely. All these things are, I have to say, and the Millennium Challenge Corporation.
From your lips to God's ears, Bert.
When the Millennium Challenge Corporation has not been talked about much here, but I think one good thing they did is they were looking for governments who wanted to bring in certain issues. There's been very few funds that they've done. Obviously, I think the precondition for any of these enterprise funds would be that the government would want these countries to come in and would provide some benefit, whether tax-free or whatever else. But I think, to be provocative, I was just in Saudi Arabia last week. There's a lot of poverty, there's a lot of extremism, there's a lot of instability, and it's extremely unfortunate, not to say reprehensible, what's happened there. But if you're talking about decentralizing political power through economic decentralization, you could do worse than putting an enterprise fund in Saudi Arabia. There would be the opportunity of leveraging Saudi money, but the essence here would be that fund would be run on American private enterprise principles with the transparency and accountability that a lot of people in a country like that are hungry to see. Pakistan is another great example. I just think where you're looking at what are strategically important countries where the people where there is disparity in wealth and where there's a need to decentralize economic power. And in my view, that's where an enterprise fund would be good.
Okay, but Bert, how about, so I probed a number of folks when I had this discussion, was writing the report about Haiti. So what is your response to Haiti? Do you have fund? Does CIF have a fund in Haiti, first of all? And is it just too dangerous or too complicated or too broken to do something in Haiti like this?
That's a great issue. I mean, there are certain things basic issues, I'll go back to where John is, where the government is not providing people in Haiti with safe water or with reliable energy, where I believe private sector solution could be done. We've looked at Haiti on a number of occasions. It is chaotic. It is also donor distorted. And one of the issues that you have to worry about if you're making private sector investments, you're likely to be sustainable. If the donors are throwing money around, and if there is an expectation on the part of the government that there is no accountability for the funds that are there, and unfortunately, I think Haiti, which is lurching from problem to problem, has a big problem with the government being spoiled at some level by donors. We're looking at Haiti as part of a Caribbean solution, particularly on the energy front. And I think we can spend a lot of time to make energy investments, sustainable energy investments there. But I think Haiti and parts of Africa, frankly, are difficult because of the expectations of the government and of the people there.
Okay, Agnes, you said Ethiopia. Where else would you set up an enterprise fund today?
I'll be totally provocative and say that I would set up an enterprise fund for the impoverished areas in the U.S. Mainly because, well, that's what I'm working on first. Not the enterprise fund, but impoverished areas in the U.S. But, you know, entrepreneurs, as John mentioned earlier, have been the job creators in this country and other countries. And more than 80% of venture capital funding in the U.S. goes to 3 states, New York, Massachusetts, and California. 2% goes to minority entrepreneurs, and 1% goes to women entrepreneurs. So if someone was to really set up an enterprise fund that would be supporting enterprises in low-income districts and these new opportunity zones that were set up, it would be incredibly powerful to deliver economic growth. So that's my main recommendation. I know that's not the topic of this, but that's where I would do it.
That's all right, fine. Jim, where would you set up enterprise funds if you had your druthers?
I wouldn't have had that question on the table, first of all, because it's such a political thing that I'm not sure we can add too much. I'll answer it quickly, and I'll take a minute to cover something else that was covered already. So if I had my decision, I had to make a decision right now, I agree. Pakistan, I would add Jordan and Iraq for consideration. And if you gave me a year, I would think Zimbabwe, if they clear up their arrears and come to an agreement to have an IMF program, would be a very good country. And of course, North Korea, if we come to an agreement. But we could spend hours discussing that. I'd rather come back for a minute just to give you one illustration. When I took the assignment, there were 2 things that were said to me. Hillary said, this will take 10% of your time.
Yeah, right.
And we have to think future chairs have got to have the time. I can't, this morning I was awakened very early in the morning because a tender offer had been made by the Sawiris family for one of our investments. And so I thought, wow, I'm back into my investment banking days. I didn't expect that. And then the next day, the Egyptian government is unhappy that I haven't involved them enough. I have to spend time on that. And we have very good people in Cairo. So this job of chairman cannot be understated. It's so significant, whoever we pick, and I don't think we really did a good job of picking people. We picked a lot of talented people who had good records back in the 1990s, but the question is, do you have the time to be engaged to help solve these problems? In today's world, it's a lot different. So I cannot emphasize that point enough. Secondly, the first advice I got, I always remember from State Department and from the White House, we won't mention any names, was, Jim, we have to get into the SME world, so you've got to put a number of Americans in there to find SME investments. I thought, wow, that's a lot of people for a lot of little deals. Unfortunately, we didn't do it. The first investment we made was in a payment service, a mini PayPal type thing called Fowlery, which an entrepreneur had done a spectacular job of building it. Talk about importance of financial inclusiveness. As you know, most people don't have a bank account. Probably 10% of the people, maybe 12% of the people in Egypt have a bank account. So how do they pay their bills? So we bought major control of it, but we took in 2 investors with us. That was one of the best things we did. We didn't try to do it ourselves. We could have done that. We brought in another fund from Sub-Saharan Africa called Helios and a British group called the Wellcome Trust. That was $80 million coming in that had never been brought into Egypt before. And that would be a catalyst for other investors to come into Egypt. And I'm amused no end that Warren Buffett, who fortunately I have known for a long time, decided to make an investment, was announced yesterday, in a payment service in Brazil and in India. And one of his assistants happened to confidentially pass the word on to me that, would you be interested in selling your payment service in Egypt? I said, wow, if Warren is thinking about the frontier world, that tells you how much money there could come in. Payment services, this little company, which started, when we got in there with less than 5 million users, now 24 million Egyptians are paying their bills through this service. And they have well, I'll give you all sorts of details. The fact is that half the country, 50 million people, will use payment services. Talk about financial inclusiveness. Not only can you pay your bills, you could borrow a little bit of money, you will be able to take out an insurance policy, all sorts of advantages that have changed the country around. And we are improving the quality of life for the average Egyptian by doing this kind of thing. So rather than put 100 Americans on the street, which were not needed or wanted even, to find SMEs, you find a growing company like this, and you could make a greater difference in that country. That could be done all over. I didn't mean to dominate the conversation.
No, but Jim, let me just push a little bit further, because you guys are going to, the U.S. government put $100 million into the Egypt fund, more or less?
300.
300. We're going to get that money back?
Yeah, so, by the way, that's another big change, I would say. You have to come to an agreement early on what you're going to do with the liquidation proceeds upon liquidation. We do not have an agreement on Egypt right now. So the Egyptian government always says to me, so what's going to happen with the profits? The American government, for various different reasons, then decided to finesse the decision. So we will have $300 million. The market value of the $300 million by the end of, let's say, 2 years from now, will be $600 million. The money we're bringing in, probably the Egyptian Enterprise Fund, 6 or 7 years now, will be $1 billion.
So the USG will put in $300 million, and the USG is going to have the high-class problem of doing, what do we do with $1 billion worth of returns?
So what we should have done is agree in advance, and that we should do a future enterprise fund. First proceeds and liquidation should repay the United States government. That will make some conservatives in Congress feel better, that it's never going to cost taxpayers $1 if you do it well. That's a big if. So the United States government gets back its $300 million. The $700 million, I favor what was done by some funds in the 1990s, would create a legacy foundation to help hospitals and help schools and all. But we made a very important decision now last year. We could see so much profits that we're making, so much gain. We just did a first public offering, as I said, that we decided to shift away from making money and to go into development more. So we have made an investment in schools, which is growing very significantly now. We'll probably end up making money when I thought we were doing more good than that. Secondly, we've invested in some place which is building clinics for healthcare. And thirdly, in the agricultural area. So we shifted to development. My goal was if we make 7 or 8% on our money instead of 30 or 35%, and we're helping development, that's critical. As it turns out, we're going to help on the development side, but we're actually going to make more money than I thought. So it's very important to change that direction, which we have made. And I would say all of this has to be factored into new enterprise funds. How you're going to do it, who's going to run it, and maybe your strategy, which is very critical. I wouldn't change the overall monitoring management of it. I've been very pleased with the work that AID has done with us. I don't have much to complain about. They left us to do what we needed, and we've kept very well communicating with them. So I'm not so quick to make a change on the monitoring by the U.S. government. I'm much more interested in what I've said already, trying to get the private sector a bit more involved and being a little more flexible in the investment program.
Okay, I'm going to jump back over to John. I want to go down the panel on this issue of, John, the BUILD Act was recently passed. The BUILD Act was in essence to strengthen and give additional capacities to OPIC. It's going to be renamed something International Development Finance Corporation or USDFC, a little bit sort of TBD what the name's going to be, but it's sort of an OPIC on steroids. But one of the things that we've been arguing here at CSIS for 7 years, starting with a report we did in 2011, was that OPIC needed equity authority. OPIC needed the ability to provide technical assistance. OPIC needed some ability to think about things like first loss. So sort of technical, wonky things. But it seems to me that if you were going to do future enterprise funds, having a strong, in theory, having leveraging at least leveraging the knowledge of the last 25 years of learning of AID, A, would be important, but B, it seems to me there's this window of opportunity perhaps to do more in development finance, including the use of enterprise funds. What's your reaction to that?
Yeah, that's absolutely right. And I think it's a good time to think about what should be our full panoply of tools that we can use to apply to this question of promoting entrepreneurship and promoting private sector development and promoting investment. And the BUILD Act is a wonderful thing in terms of giving, taking OPIC from, a 1970s model to a 21st century model in terms of its ability to do a lot of things that most of its peers had already been able to do. And I think those have applications in many, many places. And so I think that, like I said at the outset, the first question should be, when you think about an enterprise fund, is what are you doing that's not covered by those tools? Because one thing those tools do is they, at the outset, bring in more commercially oriented capital. And of course, OPIC also has windows that are focused on impact investment type capital. But there are places, and we've named a number of them, where even impact investors are going to have a tough time going with the classic DFI model. I won't say OPIC model, because like I say, now OPIC has a full panoply.
But IFC, FMO, the alphabet soup of European DFIs, some of the places we've talked about are places they're not super enthusiastic about going to.
And it's just tough to make the numbers work. When you look at those environments, and that's where I think an enterprise fund makes a lot of sense if it's structured correctly, and we've talked a lot about it. I do think part of what you should be thinking about is how an enterprise fund opens the door to some of the vehicles that could come out of a new BUILD Act entity, which opens the door ultimately to a purely commercial environment, which, today if you look around Eastern Europe, that's largely what you see in places where it's not being rolled back. But in places where they've maintained a commitment to the private sector and the private enterprise, you're seeing a dynamic where enterprise funds led to some very successful DFI-supported funds, including OPIC funds, and where now there's no shortage of commercial investors who are active in those areas.
Okay, so let me just go a little bit inside baseball. So the new DFI is going to have the ability to make equity investments, but there's sort of two ways you could get money to make equity investments. One way would be to go to the Congress and say, hey, over and above whatever we're spending now, could we get an appropriation a la what we've done in the past for enterprise funds? Could we get money for some new funds, which just given the environment, it may be a little tricky. The other one is having to do with sort of there's this account that OPIC has that could be tapped into. Could you just talk a little bit about that? Because I think it's a little wonky, but I think it's important.
And as an example, I'll talk about a little bit something that Bert's done, which is, so basically the way that OPIC appropriates money for its investment, it uses the U.S. balance sheet to make its investments. And most of its investments are expected, and over its history, the vast majority of them have, to return their capital and then some, to provide actually a reasonable return. And therefore, if you account for them properly, they don't have a cost. They're an investment. They don't require an appropriation. But of course, some investments will lose money. And what federal credit reform requires is that for every time you decide to make an investment, you have to make an estimate of what the likely cost will be. And if you believe there's a better than even chance of money being lost, then you have to draw what's called subsidy. And there's a certain amount of subsidy that's appropriated by Congress. The vast majority of investment funds of the 50 or 60 that OPIC supported are what's called negative subsidy. That means when you do this calculation of what the likely cost is, you come up with the fund will most likely make money, not lose money. You do a fund in a place like Afghanistan, like Bert did, that is a positive subsidy fund. He needs to draw, or OPIC needed to fund Bert's fund. OPIC needed to draw money from their subsidy account. Now, as it turns out, I believe they're not going to need to use it. Yeah, so I mean, they didn't not the same amount of money as, say, our India Venture Capital Fund made, which was the Draper Richards thing that was fantastic example. But so one way to allow greater investment in more places is to plus up that subsidy account so you can use more subsidy to do more things in places like Afghanistan. I would argue that some of what we're talking about when we're talking about using enterprise funds are in places where that subsidy hit would be so high, it might be easier to just appropriate money as an initial seed investment and then layer on top of that private capital.
Okay, so Bert, there's the BUILD Act's been passed. There's sort of these instruments or funds that OPIC has that might be tapped for a new wave of enterprise funds. How should we think about a new wave of enterprise funds in light of sort of these new authorities that OPIC has, and how do we leverage also the learnings that AID's had 25 years of experience with that. So I also want to just say my predilection would be to keep to keep new enterprise funds at AID, given that they've had a lot of experience with this, but it seems to me that this would be, maybe this is something the new chief development officer at the new DFI should be working with AID on, but then leveraging some of the instruments and assets that OPIC has. What's your reaction to that?
Well, I like a lot of what John has said. One of the things that needs to be taken into account for me is that the enterprise fund should be a complementary product designed to promote private sector development in difficult countries that are strategically important. I know that's political, but I think that it needs to be part of a suite of instruments that probably at this stage OPIC is best placed to handle. And I don't think you want to have an OPIC fund bringing private sector money in, competing with a politically advantaged enterprise fund. I think there needs to be some coordination in that regard. But I do think that it's extremely interesting to look at the enterprise fund model and potentially look at some new investment models, whether a permanent capital vehicle or whether a vehicle that could be listed ultimately in a place like London, which would provide continuing private sector investments in particular countries which, the liquidity for acquisitions or corporate control are less. We have a permanent capital vehicle in Bangladesh. It's a terrific country. It's been growing at 6.5% since 2004 per year. But it's still off the roads, whether the government or whether the fact that it suffers by being close to the huge country of India. People tend to look at Bangladesh.
It's overlooked.
It's overlooked, and I think yet it's an important country. I mean, certainly the Chinese and the Indians and the U.S. know it's an important country at this stage. So, those in a place like that, where corporate control, where the acquisition, the strategic sales kind of opportunities, let alone IPOs, are still muted, the enterprise fund could come up with a new structure which would continue to focus on growth in a way that conventional products that OPIC, for example, would be underwriting couldn't really do. So to my mind, it can be a terrific complementary tool. It needs to, I think, take into some of the lessons in terms of the considerations or the worries that ultimately private investors would have. I like the point made that local money should be brought in some way, as long as the transparency, the integrity of the fund management process accords with the highest American principles, not the lowest American principles.
Okay, Agnes, so this issue of sort of what is the BUILD Act, what opportunities does that open up, and how should we think about this in the context of the BUILD Act?
So I'll follow up on what you said, which is that I think it's imperative that the new institution really find a good way to leverage USAID. And it's not just for the expertise around enterprise funds. I mean, in some of these areas where enterprise funds might go that do not have an entrepreneurial ecosystem, it's really USAID that can build that through technical assistance, through programs that are providing expertise in different sectors. I mean, it's, enterprises don't just grow through investment, they really grow through know-how. And I do think that, places like, let's say, North Korea in the future, you will need an organization such as USAID to come in and help build that system before you can really make any investments.
Okay, Jim, your thoughts about sort of the BUILD Act and what opportunities that presents?
I'm always saddened the Exim Bank is left out of the whole discussion since I spent 4 years there, and I think
I'm pro the Exim Bank, just for the record, but yes, I agree. It hasn't. We haven't mentioned the Exim Bank in this
also,
conversation.
there was
today.
a word used by one of my colleagues here, coordination. I never found a lot of coordination when I was at Exim Bank those 4 years, but even coordination between OPIC and ourselves and the Trade Development Agency. So if there was a way we could inject coordination in the United States government, that would result in some very good things. So maybe the new BUILD Act will somehow do a review of what changes should be made at OPIC that could be constructive. It always offended me that OPIC had a private placement project finance team, which were quite good, and Exim had the same team. And one day we would be going in the door in Zimbabwe, and they would be coming out the door, and I would scratch my head and said, I didn't even know you were coming. And I thought, wow, we're all owned by the same parent company, so coordination would be good. I'm a cautious optimist that somehow the BUILD Act will start to make some changes at OPIC and maybe coordinate with some of the others, and maybe some good will come out of it. Lord knows it needs it.
Thank you. Okay, you've all been very patient. There's some very smart people in this audience, so I want to hear from a number of you. I'm not afraid to cold call, so I'm happy to cold call. I'd like to get several. Okay, so my friend back here. Who else? I'd like to see some hands. My friend in the front, and I also want to hear from Kim Davis. So the three, this person, and Kim Davis. Okay, go ahead.
My name is Dan Silverstein. I'm a private sector and capital markets advisor. I'm not one of the smart people in the room, so I really appreciate you calling on me, Dan.
I'm an inclusive guy.
And I am the beneficiary of that. I need a point of clarity. When asked, each of you chose to, except for Ethiopia and Egypt, you chose to find a reference in a fragile state in discussing this whole idea. John, you infused the idea, however, that these are really vibrant vehicles that can create a transformative change. And I'm wondering, yesterday I had a meeting, I was part of a meeting with the Georgian ambassador to the United States, and he and the economic attaché made a forceful argument for their commitment to rule of law, enabling environments for entrepreneurship, building 4X. And I'm thinking about them and Uzbekistan, Azerbaijan, Central Asian countries that we know are emerging now. They're dressed up, ready to go to the prom, higher up on the doing business index list. Is there a reason why you don't gravitate in your thinking towards them as opposed to these more fragile states?
Okay, let's just bunch these together. Please, Carmen, this gentleman here.
Hi, my name is Bill Baldridge. I'm with USAID, and I've been associated with both the two Middle Eastern enterprise funds. So just a quick comment on context. I think it's worth all of us thinking about, since many of us come from the development background, pushing away development for a moment and thinking about soft power and the potential implications of enterprise funds for us as a government in the area of soft power, not just development. And when you combine that consideration, because that's a huge area of challenge for our country vis-a-vis China, where they use loan guarantees, and Jim has a remarkable story about how China became such a preeminent force in the loan guarantee world that he can relate. So if we think about soft power, not just development, and then think about where the enterprise funds have done well, a lot of times it's not only been the entrepreneurial ecosystem, it's been the securities market regulatory and capital market systems that so many of us here worked for so many years on. It's the countries like Egypt and India and Pakistan and basically all the countries of Eastern former Soviet Union, Eastern Central and former Soviet Union, where we set up very robust capital markets.
The United States helped set that up.
Right, USAID helped set up capital markets. One of the conversations I had with Jim early on was, I kind of admitted, Jim, I don't really see the need for this.
In Egypt.
In Egypt. They've already got a capital market there. When we did this in Poland and Hungary and Kazakhstan and Kyrgyzstan and Uzbekistan, they didn't have capital markets. We've already got it in Egypt. Why do we need it? And Jim, your returns are going to be pathetic because they've already got competitive capital markets there. How can you possibly get a good return? Well, his returns, he sort of laughed at me, politely and stuff, and said, no, actually, our returns will be a lot better. Overnight, they were a lot better because he came in on the platform of a well-regulated capital market compared to, say, Poland in 1994 or Kazakhstan in 95 and 96. So looking at these countries that, number one, have massive domestic markets like Egypt, Pakistan, India, there are a large number of them, and other countries with smaller domestic markets but still robust capital markets, we can probably have very large negative subsidies forever moving into Romania, Kazakhstan, countries that are not, high priority countries, but where we could provide capital and have a massive soft power presence through enterprise funds going forward. So that's just an idea.
Thank you. Okay, Carmen, my friend Kim Davis.
Can I just make 3 separate comments?
Yes, of course.
I was brought in, I've been involved with the Baltic Enterprise Fund since 1994, and I now chair the Legacy Foundation, so I've got a pretty long history here.
And all that for free, by the way.
And so I agree with basically the entire theme of the panel. And I'd make 3 separate comments. One, on Haiti. in 2011, Senator Lugar asked 5 of us who were chairmen of funds to go down and investigate the idea. We came back and wrote a long report on why an enterprise fund made fun for Haiti in 2011. And
Made sense.
Made sense. And
Okay.
we were, to say that the State Department was unhappy with us would be an understatement. For reasons I've never quite understood, but it was just not where they were mentally. But there was a very compelling argument for an enterprise fund in Haiti in 2011. And I think that was a real missed opportunity.
We ought to revisit that. I'm with you. Thank you.
The second issue is I took over the Czech fund when it got in trouble for 6 months as the acting CEO. So I saw a failed fund up close. It's at the intersection of incompetence and lack of transparency. They had an incompetent chairman, and they were really hiding the ball from USAID. By the time USAID got onto it, it was too late. They had basically squandered 90% of their capital. So I think that you have to have you have to control your decision making at the enterprise fund, but you have to have a willingness to be really open and transparent, both of the USAID and state, with what you're doing. And I think if you're transparent, the relationship can be fine. David Coles here is now my new minder at USAID. I've had probably 10 of them. And I would like to think that all 10 would say that we've been very transparent over 25 years. The last comment I'd make is maybe a nuance, but I think enterprise funds are always associated with equity, and I would argue that in many of these markets, the real need is traditional commercial finance, leasing and loans. And you could argue that they're subsidized in the sense that you make a 12% loan and you ought to say, hey, that's really a 30% IRR piece of equity. But the enterprises in a lot of these fragile economies can sustain, from a cost of capital standpoint, the return on equity. Egypt, Poland, large countries, large markets, domestic capital markets. The Baltics, 3 countries with very small economies, no capital market. So I think the enterprise fund has to have the nuanced ability to respond to not just the needs of the country, but to, as was said, the state of the capital markets in each country. So I'll leave it at that.
Okay. All right. So I'd love to hear from the panelists. John, start with you.
Well, I think the one big question that was put on the table, which sort of we quickly gravitate to, is where is it appropriate to use this tool? And I think it is worth thinking about if there is going to be, a new initiative effort on this to really begin to spell that out. I have my own views, but I think they could be different. I mean, I think that the 2 big criteria from my point of view is a place where the political regime is supportive of private investment. And by supportive of private investment, I don't mean just saying, oh, we'd like to have private investment, but it actually is taking real steps to try and open up the markets to private investment and to make it and to create some sort of transparency, recognizing that maybe at the very early stages of that, but at least there's at least clear signals that that's an intention, and B, where almost by deduction, where the other private capital tools are not effective. And that could be A, because you're in a post-conflict situation, B, because you're in a political transition, C, Dan, as you said, because you're in a small country, a small market that frankly is not worth the time for a lot of more commercially minded investors, whether impact or commercial. And in all those sorts of places, I think if you have those 2 conditions, those are probably the types of places you should be thinking about this tool versus the other tools that are in the toolbox.
Well, thanks. Just very briefly, I think Georgia is a great country. We've been with the Millennium Challenge Corporation and with the DFIs in our first Caucasus Growth Fund, so we've already put $100 million in Georgia. There's a partnership fund. There's a whole lot of other people coming in. So in that sense, I don't know, but I don't think an enterprise fund would be that additional. There's even a good banking system. TBC is a great bank. The Bank of Georgia is doing a lot of work. But that's a detail. What I think I agree with John in terms of enterprise fund, you probably have limited powder. Where is that powder going to make the biggest impact for the taxpayer? Because ultimately it's taxpayers' money. I think the capital market point at the very top, it is there, and commercial finance or commercial paper would be great to have as well. I think what we've seen the enterprise funds do very well, and I like the reference that Kim made to the Baltics, it's where they are looking for providing things that aren't there, whether it's a mortgage company, where you could put equity in a mortgage company which would make loans available, particularly if it's local currency. I think the big problem today, there's 2 times more U.S.-denominated debt out in the emerging markets than in 2008. We know what happened in 2008. I mean, I think there is entirely too much I think, unrealism that if you put U.S. dollar debt out to smallholder farmers in Tanzania, that's a safe investment because you've got a debt sort of agreement that says it's going to be repaid in 5 years. In fact, there's a lot of volatility, including in the value of the dollar. So I think one of the great things is if we're going to look at alternatives to equity, local currency, I think, would be something. And again, if there's a higher political reasoning behind that could be founded, and over time, I think, could make a lot of sense. I appreciate the comment made on incompetence and lack of transparency, which the only thing I would say is that also exists for private equity funds. I mean, Abraj has had a spectacular blow up, and I think there's a lot of people who are looking at themselves and saying, well, gee, we should have done a little bit better job on accountability and transparency as well.
Grace of God go we.
Well, amen. I mean, so I mean, I think, and that goes back to John's and Agnes's point, that Congress needs to understand that this is an important tool in a capital deck. There's lots of different kinds of finance mechanisms. I would say, for what it's worth, use the enterprise fund bucket for the more innovative, the more missing pieces of capital in countries that are important. That is unfortunately a political choice. So while we can ask, I agree with Jim that it's not really ours to answer. But anyway.
So Jim reminded me of a very painful period of interagency coordination within the U.S. government. But I have to say that I worked in Power Africa where it was painful, but we did it. And the private sector appreciated it because various agencies could meet with one company at the same time and figure out which agency was most appropriate to help them. So I do think the new institution needs to prioritize interagency coordination and figure out how all the different pieces of the U.S. government can actually help it. I think the tendency will be to kind of say, oh, I'm the new, most innovative kid on the block, so I know what I'm doing, and just go into those countries and start doing new work, when actually a lot of existing work is already happening. And I think it's only to the benefit of the new institution to coordinate with the other agencies on the ground, in the field, not just in Washington.
Do you want to react to any of the comments or questions that were put up?
I agree with all my colleagues. I think you needed 5 hours to really cover the subject or to take this team on the road somehow. But I'll just add a couple things. In every country that I have gone to, and I figured out at Exim, I was in 72 countries during that 4-year period of time, and I've kept up with a number of the people. Everybody says they need private equity. They all say the same thing. We do need to grow our private sector. We do need private investment to come in. So you have to differentiate between those who say it and those who will help to do it. But one of the important things you can do in an enterprise fund is you can bring in U.S. forces to help the country. So we have brought in a giant insurance company to work with the consumer finance business, which is going to provide insurance mechanism. So we can give you illustration. We have brought them to the Exim Bank, if Exim Bank was operating. So it's important for an enterprise fund to use other agencies, the United States government, to provide other services and other kinds of funding. So you have to be a representative of the U.S. when you play this particular role. But a last comment is we're in a difficult market period right now. Some people say it's a correction. I think it's more than a correction. So the emerging markets index is down 26% year to date. And that's been painful, and it's heading lower in my judgment. So this is the moment where enterprise funds could play even a greater role, because the public markets right now in these countries, which they have developed, which is a good thing, may not be able to provide the funding that they thought they could do. So one could make a better case today than you could a year ago for enterprise funds.
Okay, I can take two more. I want to hear from this gentleman, and I hear from this woman here. Okay.
Hi, I'm Mark Stuckert with OPIC. I'm on detail currently to the Office of Africa in the Commerce Department. I want to thank CSIS for this very, very timely and extremely well-written document. I think it's very thought-provoking. OPIC, you've talked a little bit about the BUILD Act. I think the new equity power is very exciting. We'll have to see how that all works. But the enterprise fund concept has been extraordinarily successful over history, the Polish American in particular, but it's been a phenomenal tool. The IFC has equity power as well. We'll take a look at that. You mentioned in the study counterbalancing Chinese influence, and I'm seeing this in Africa just to an extraordinary extent.
Yeah, technically speaking, they're eating our lunch, right? Yeah.
The scale of what China is doing in Africa is just extraordinary. There are perhaps $100 billion of MOUs currently outstanding in Africa. My question, we've seen all the predatory debt, the problems that's created in places like Venezuela, the Chinese, but when you roll out the efforts to try to galvanize this with the executive and the legislative branch, I hope the scale is something that keeps in mind, because just the scale of what China is doing is just extraordinary. And also, should we have enterprise funds for a single country, or is it better to have it for a regional basis? Thank you.
So I agree with all that. I don't think, I was very pro the BUILD Act. I was very active. I testified twice in front of Congress in favor of the BUILD Act. We need a functional Ex-Im Bank. It's colossally stupid to not have a functioning Ex-Im Bank. It's not just an embarrassment, but they're kicking our butts and eating our lunch. And for the fact that we don't have a functional Ex-Im Bank is just a colossally stupid thing. I think it's great that we've raised the credit card limit for OPIC, and kind of OPIC on steroids, from 25 billion to 60 billion. Ain't enough. OPIC does about $4 billion a year. Maybe the OPIC on steroids will do 6. Compare that to sort of whatever the number is. I think enterprise funds is another tool in the toolkit. We need an international economic strategy that Republicans and Democrats can get behind. We need to have it for the next 25 or 30 years. So I agree that these are steps in the right direction, but this is a multi-mile journey, and these are specific steps in that multi-mile journey. So I want to hear from the panelists on that, but I'll...
Just to give you one statistic, OPIC's got about $23 or $24 billion of business on the books, right?
In Africa. No, in total.
Currently.
Yeah.
China Development Fund, China Development Bank.
Yeah.
Is only one of 4 big
Yes, China Ex-Im Bank and these others.
$1 trillion.
Right.
That's 100 times bigger.
Right. So it's we've got a real challenge in front of us. This is, this is not an emerging competitor. This is an emerged competitor, and we need to wake up and smell the coffee. Okay.
Jean Lang, former U.S. Treasury and USAID. This is going to sound like a really mundane question after the China comments. However,
my middle name is mundane. It's no problem out of the think tank. Come on.
I would really love to hear something about the dual mandate. No one ever really mentioned the dual mandate or development impact, a little bit on Egypt. But I would love to hear what each of you think. How would you define development impact and how to measure it?
Okay, this is for enterprise funds.
For enterprise, excuse me.
Yeah, the dual mandate
for
of enterprise funds was to enable private enterprise and have a development outcome, right? Right?
Yes, but what is the development outcome? How would you define development impact?
I'll know it when I see it. How's that? No, okay, thank you. Okay, let's start. Jim, what's your reaction to that? And also, do you agree that we should have a fully functioning Ex-Im Bank?
I won't even answer the question on this one. I think the question just raised now is a very important question. I often tell young people, if you want a future career-related areas, I would go into measuring impact. Consultants are all trying to do it better and get assignments, and so people are looking at how to measure. We have spent a lot of time trying to measure our impact in Egypt, and there aren't a lot of consultants that are too advanced. There's a few, so great opportunity for people to look at. That is very important. It doesn't seem to be a focus so much when they talk. It was discussed with me. Everybody wanted to have a development impact. No one said, is it just job creation? Is it gender related to job creation? Is it impact in a number of other areas? This is a separate subject which we could discuss hours on, but I'm hoping that increasing number of consultants will do well in this area. But I think the IFC is trying to do better in this area. The World Bank is trying to do better. No one has a perfect answer, but sometime in the next decade, they'll probably come around to it. I think we're helping focus in Egypt on exactly what is the impact that we're having. But we are, as I said earlier, once we saw the kinds of returns we were making, we shifted gears into focus on development. So we're doing things that might not show us the kind of returns in other areas, but will have a development impact that is very significant. But it's not just in job creation. It's in a lot of other related areas. Longer subject, good question. I wish we had time to discuss it.
Okay. Agnes?
So I spent a long time in the impact investing industry, and this is a question that's been asked for over 20 years every day. I will say this much. I think it's very context specific. So I think one enterprise fund shouldn't have the same impact indicators or another enterprise fund, and shouldn't be prescribed by government. I really think that what you really need is good governance and the stakeholders at the table, the right stakeholders at the table, to define what impact will be for that fund, and then to be accountable for that. But it has to be kind of a mutual decision, and it has to be very context specific.
Well, I'll briefly talk about that. We've been measuring since 2004 sustainable employment, which is wage growth divided by employment growth, as well as taxes paid as a kind of a transparency figure. I think the real value of the social development goals from the UN is that it's become more important to look at basic needs and look at that sector and how you define impact in that sector. And the general rule is, now whether the enterprise fund should do that, because you can't burden the beast with too much. It's got to be able to do growth, in my view. But is intentionality. If you set the goals, if you're doing a health deal or if you're doing an education deal, you should try to set the impact goals up front and see whether or not the enterprise has in its own growth path these impact criteria baked in. I think we want to back companies who are doing something good socially, and we want to try to understand that up front a little bit better than merely looking at it ex post facto. As I say, we've been looking at it since 2004 in general for SME growth, for general growth, but I think there's a real value to trying to understand what the pathway or what the theory of change is. I did want to bring up one question on the regional versus the country fund issue. I think when you're looking at transition, I think a country approach makes a lot of sense, particularly if it's a large country, printing companies or hospitals, et cetera. These are terrific things that need to be there. But with innovation, and I think there's a substantial increase in the ability via the internet to do business over multiple countries. We love the Maghreb for this reason. There's an Arabophonic community that's much larger than any one country. There's a Francophone community in West Africa that's much larger than any one country. I think when you look at innovation, I do believe...
The Northern Triangle.
Same thing. I think the issue is to try to keep the regional issues in mind when you're looking at tech deployment. And I think that's something that we've been doing. It's difficult because people are used to looking geography only. But I think if you're looking at a region where you're trying to improve the lives of people, whether it's through distributed solar power or whether it's through education via content delivered by the internet, these things are things that can be done on a more regional basis. And I think, again, it's difficult. We can't, the excellent is the enemy of the good. We should focus on what the enterprise funds can do. It's one policy tool, and then let's see whether the rest of it puts together.
Yeah, so this issue of dual mandate and having to sort of both deliver financial and social returns, I mean, that's been at the heart of impact investing, as Agnes has said from the beginning. And there's some sense two camps. I mean, there's a camp that I think is one I align with and Agnes mentioned, which is you got to look at the local context and think about what is it you're trying to accomplish with this particular investment. And there's another camp that says, oh, we got to standardize everything and everyone should be measured by the same metric. I think it's very tough to do the latter. I think you wind up with sort of square pegs that you're trying to shove into round holes. And that really, the question, I mean, the important thing, and Jim, I think, references, is to at the outset define what is the non-financial metric you're trying to hit and build that into your underwriting process, your investment process, and into your monitoring process. And so make sure that is rigorously monitored, make sure it's rigorously reported, so there's the transparency and accountability that we've talked about. And in a perfect world, and we don't live in that world, but ideally what you'd have is investments that where the impact you're trying to achieve, the non-financial impact you're trying to achieve, is so fundamental to that investment that for them to succeed financially, they're also going to have to succeed with regard to that non-financial impact, whatever that is. That could be increasing livelihoods, it could be increasing growth, it could be increasing access to basic services, but whatever that is, in a perfect world, measuring that also is going to tell you a lot about how they're going to perform from a financial point of view. To this last point on China, I mean, I think the numbers are scary if you look only at the numbers. And so I think when we think about how we go head-to-head with China in this world of private development, we have to recognize that there's a lot more to it than just numbers. And part of what we have to offer that the Chinese, I think, can't offer, at least not the way they're currently set up, is support for ownership and entrepreneurship in a way that a Chinese model just won't do, because that's not what they're looking for with their own investments. And if you can bring to the table the fact that, you know, our investment tools lead to a growing middle class, lead to opportunity for entrepreneurs, lead to decentralization of power, and lead to greater proliferation of ownership.
And better standards, too.
Yeah, and better standards. That's actually a third thing. That's something that I think, you know, gives us an edge. And you know, in my experience, throughout the developing world, particularly my experience has largely been in Africa, entrepreneurs want to work with Americans. They buy into a lot of what America is selling. They just needed the Americans to be there. And that's part of what an enterprise fund and all these other tools can
If we have
actually-
11 foreign commercial service officers in Africa, that's a problem.
Yeah.
And we also probably need to get back at the front of the parade on the anti-corruption parade.
Absolutely.
Okay, please join me in thanking the panel.